Hello, welcome to the European Open briefing for Thursday, March the 2nd. I'm Rafi Barajian, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So we're seeing the dollar extending its gains this morning. The dollar index reached a 7-week high, and this comes on the back of growing expectations that the Fed will indeed raise rates in March, whereas previously such expectations had been quite low. There's been a more hawkish remarks by Fed officials. We had Fed Governor Lael Brainerd making more hawkish remarks, even though she's usually known to be more dovish. But aside from that, the overall positive sentiment for the US economy following Trump's pledge to cut taxes and boost infrastructure spending, that's boosted US stocks to yet another record high. The Dow Jones broke about 21,000 level for the very first time. In other currencies, though, we're seeing some weakness. The main one, of course, is the pound because of ongoing Brexit concerns and some recent weak data. And in commodities, oil prices look set to be down for a third straight day. We had some US oil inventories data yesterday, which showed US oil stocks rose to a record high. But let's begin with the dollar-yen pair and the dollar index. The dollar index, as mentioned, was a 7-week high. The dollar-yen pair reached a 2-week high of 114.30. Fed Governor Lael Brainerd added to the chorus of hawkish remarks. She said that it would be appropriate to remove monetary accommodation soon, citing improving external environment. Last year, of course, the Fed raised rates only once, mainly because of the uncertainty from Brexit and other external weaknesses. For now, though, we've seen improved growth in Japan, in China, in the Eurozone, and UK. We're seeing limited impact from Brexit. So the Fed is becoming more and more confident that they can raise rates more aggressively this year. There was some mixed data, though, yesterday from the US. We had weak consumption growth in January, and this was mainly due to the higher consumer prices impacting the spending habits of US consumers, and this may put some additional pressure on the Fed to raise rates because we're seeing headline inflation rising above 2%. So the main focus now, though, will be Yellen's speech on Friday. She's due to speak about the economic outlook, and of course next week we will have the February non-farm payrolls. So that will be very important to indicating whether or not the Fed will possibly raise rates in March. But for now, the markets are pricing in a 73% chance of an increase in 2 weeks' time. Let's have a quick look at what's happening in the US stocks, because the rising equities in the US, that could also be another reason for the Fed to raise rates. Both the Dow Jones and the S&P, we can see in the chart, closed at a record high yesterday. The Dow broke about 21,000 level. The Nasdaq was also at a record high. Stocks have mainly been boosted by hopes of big tax cuts for US businesses and for the middle class as well. And Trump has already pledged $1 trillion infrastructure spending in his speech in Congress, and also Trump didn't really give too much detail on the actual details of the tax cuts. The fact that he struck a more conciliatory tone in Congress, it raised expectations that Trump will be able to work better with Congress, whereas previously Trump had been taken a bit more aggressive tone with US lawmakers. So maybe that was a sign that Trump will have, if he takes a more conciliatory tone, he will have a better chance of getting Congress to agree to his policies. Moving on to the pound now. The pound hasn't really been doing well lately because we had a batch of weak data, and yesterday we had the weak manufacturing PMI out of the UK, although it was fairly strong around 54, well above 50. It missed expectations. We also had a slowdown in mortgage lending in January, so all of that is raising market concerns about slowdown in the UK economy. Plus, of course, we've got the House of Lords debating the Brexit bill. Yesterday, they they amended the government's Brexit bill to include a guarantee for EU citizens already in the UK to be able to stay in the UK once the UK is out of the EU. Although that's likely to be rejected in the House of Commons, the House of Lords will probably make more amendments, and we can see the Brexit bill going back and forth between the lower and the upper houses in the UK Parliament. But the Prime Minister, Theresa May, she's confident that the Brexit bill will be finalized by March the 15th, where she is expected to initiate or trigger Article 50, which is the formal notice of the UK's intention to leave the EU. But for now, the pound is at a 6-week low. It's recovered a little bit from that 6-week low of 1.2259, currently trading just below 1.23 level. Let's have a quick look at the Aussie and the Kiwi now. Both of them are under pressure from the stronger dollar, but also we had some mixed data out of Australia. There was a good set of house building approvals data, but exports unexpectedly dropped in January. The trade balance was much smaller than expected as well. So that put pressure on the Kiwi, although it's not doing too badly given the strong dollar. It's currently down around 0.3%. The Kiwi, on the other hand, came under pressure after the Reserve Bank of New Zealand's Governor Graham Wheeler said that the Kiwi remains higher than projected. He also wasn't as optimistic about the economic outlook as other central bankers recently. He said that the risk to the global economy remains to the downside, and that put pressure on the Kiwi, which is currently trading at around 0.7 to 130. Which is in fact a 1 month low. Another commodity currency, Canadian dollar, it's also struggling. That touched a 6-week low yesterday of 1.3368. The Bank of Canada yesterday kept interest rates on hold at its policy meeting. But what surprised markets was the fact that although the Bank of Canada had been less dovish recently, yesterday it went back to being more dovish, warning about the uncertain outlook. So that put pressure on the loonie. Oil prices also provided little support for the Canadian currency. Yesterday, although US crude stocks actually rose by less than expected, it took the total to a new record high. And once again, it's sort of there's a little sign at the moment that the output cut by OPEC countries is having a significant effect of putting downward pressure on worldwide oil stocks. And oil is currently, US crude is currently trading at $53.59 a barrel. That's down for a third straight day today. Before we go, let's have a quick look at today's economic calendar. We had some Swiss GDP figures out early today, which fell short of expectations. Of course, the Swiss franc is down anyhow because of the stronger dollar. We've got Eurozone inflation figures coming out, as well as the UK construction PMI. In the US, we're going to have the latest jobless claims, and in Canada, we're going to have the fourth quarter GDP figures as well. That's it from me. Thank you very much for watching, and have a great day.